Nicole here with your January almond market update. As we start the new year, the industry looks for a clear direction. Let's break down the latest numbers and what they mean for the months ahead. Starting with shipments, California shipped 246 million pounds of almonds in December, exceeding industry expectations and 5% above last year, primarily driven by exports. China was up 19% and the Middle East was up 44%. Looking at in-shell, India demand remains steady with local inventories still relatively short. At the same time, questions are emerging around in-shell supply for the 25 crop. Many growers and handlers opted to make less in-shell due to the slow demand to start the season. For example, as a potential indicator for the industry, RPAC has completed receiving for the season and received 32% less in-shell volume compared to the 24 crop. As this tighter in-shell supply begins to show up in available offers, it could in turn influence buyer behavior. Moving into sales, new sales in December totaled 197 million pounds, 8% higher than last year. Assuming a 2.7 crop, the industry is currently 50% sold versus 54% at this time last year. Most buyers continue with low forward coverage. On to crop receipts, the receipts came in toward the higher end of expectations. Some of this is attributed to timing as well as wet weather delaying deliveries earlier in the season. Overall, this keeps the 2025 crop on pace to finish similar or slightly below last year, with the next position report expected to provide greater clarity on the final size. Looking ahead, the focus now shifts to how supply aligns with the current shipment pace and buyer coverage. December sales and shipments both exceeded expectations. Buying activity will be the key driver of the almond market through mid-February when we enter bloom and potentially enter more of a weather market. That's your almond market snapshot for January. Thanks for tuning in and stay with us next month as the season continues to unfold.